Welcome to Group 7's presentation on the HDFC Bank case study. Edwin, Sheldon, Keoki, Stevenson, and I will be guiding you through this presentation. Let's begin. We will only cover a few of the most important facts driving the issues in our resolutions, the first of which being India's banking history. India's banking system is still very new, with both public and private sector banks as well as many specialized banking institutions. Besides the relatively new banking system, the internet is expected to grow rapidly in India, from 0.2% of the population, 2.5 million, to 100 million in 2008. This bodes very well for the young HDFC, which has no baggage and was quick to jump on online banking. The RBI sets guidelines for India's banks, but has not required any secondary level security. However, recent phishing attacks has led individual banks questioning the need for additional security at the cost of convenience to users, including its dormant users. Three key issues arose in this questioning. Should HDFC place second-level authentication on the user or the transaction? What should HDFC do about dormant accounts, legacy accounts that don't or infrequently utilize online banking? And lastly, should HDFC implement these solutions on-site, online, or off-site?
Should HDFC authenticate the user, the transaction, or both? We could authenticate just the user using two-factor authentication with user-chosen security questions for all personal accounts. We could use token generators for all business accounts. We could just increase transactional security for all transactions. We could use two-factor authentication for all users and improve transaction-based security for all transactions. Or we could strategically limit two-factor authentication while retaining current levels of transactional security through adaptive risk modeling. Using two-factor authentication for just the user has several advantages. A user can write his own security questions and answers, which would improve security by permitting the use of relatively obscure questions. Also, two-factor authentication is relatively easy to implement both for web and mobile banking. However, if a user chooses a weak question and answer, this does not greatly add to the security of the account. Furthermore, it's very inconvenient to the user to have to enter the information for every login, and it's also inconvenient for the businesses to keep supplied with token generators. The username, password, and security answer are vulnerable to keylogging, and this solution does not directly address transactional security, for example, if the security question and answer are compromised through phishing. Simply improving the transactional security for all transactions would help identify and halt transactions that are outside norms, for example, from unusual locations or for unusual amounts. If the bank calls customers when unusual transactions are detected, this can give customers more confidence and trust in the bank, which is very important in India's banking culture. This course of action may have false positives that delay legitimate transactions, causing inconvenience to the client. This course of action also does not address compromised transactions that fall within norms. It can be difficult to identify these normal ranges, especially for dormant accounts for whom we don't have many transactions. It also does not address the issue of identifying the user himself. If we use two-factor authentication for all users and we improve transaction-based security for all transactions, we can retain all the good features of two-factor authentication while also addressing transactional security. We can also retain all the good features of transactional security while addressing user authentication. However, while this solution has the best of both worlds, it also has the least convenient solution for the user, retaining nearly all the drawbacks of each solution. Using strategically limited two-factor authentication while retaining current levels of transactional security through the adaptive risk modeling and cooldown periods will retain all benefits of the previous course of action. Also, limiting two-factor authentication to certain situations balances security and convenience well. We can use security questions for personal users who log in from unrecognized PCs or locations. Physical tokens are only needed for the RTGS accounts. Limiting the transaction authentication system to only the most highly unusual transactions will continue to balance security and convenience. If a user's physical PC or phone is compromised, strange transactions can still be caught if they manage to make it past the two-factor authentication system. However, as a drawback, this does retain most of the cons of the previous courses of action. That is to say, it is still rather inconvenient to the user, but is less inconvenient than other solutions. We recommend strategically limited two-factor authentication and retaining current levels of transactional security. If we protect all RTGS transactions via tokens, we address 96% of HDFC's risk by value. Mandating hardware token generators only for these clients balances security and convenience. We expect most such users would value security highly for their very valuable transactions. If the RTGS allows for automated transactions, the point on which the case was not very clear, automated transactions can interface with the RTGS through an application programming interface, or an API. For personal accounts, limiting two-factor authentication only to unrecognized devices protects personal accounts with minimal inconvenience to the user. The existing adaptive risk modeling transactional security, we feel, is pretty sufficient. Paired with the limited two-factor authentication, this protects users when their accounts are compromised. HDFC can make incremental improvements to this algorithm to address false positives at a later date.
The second key issue, dormant accounts are especially vulnerable to compromise. What should HDFC do to address web or mobile logins from existing dormant accounts? Alternative courses of action. 1. We can prohibit login to dormant accounts without warning. Number 2, we can warn users in advance before disabling accounts. And 3, we can choose not to secure access to dormant accounts. There is a pro and a con to prohibiting accounts without warning the customers. The pro is that by prohibiting the accounts without warning them, we will quickly address a dormant account vulnerabilities. The con, however, is that this might inconvenience customers and may anger account holders. Another course of action is to warn customers that their accounts will be closed if they do not update their information. One of the pros is that the vulnerability is resolved, and this option also reduces customer frustration. The cons are that to resolve the vulnerability issue, the customers are still inconvenienced, and we will still need to it would still require staffing to contact the customers. A not so good course of action is to allow customers to continue to use insecure accounts. The pro is that there is zero inconvenience to the customer. The con is that it leaves the account and the bank vulnerable. Recommended course of action. We chose to warn the customers in advance. Leaving the accounts insecure doesn't allow us to mitigate the risk. If customers are contacted before disabling the accounts, this will reduce the frustration and inconvenience to the customer. It will persuade them to secure their accounts and educate them about account security. This also reduces the threat to the bank and to the customer.
With the issue of dormant accounts now addressed, we shall now move on to how HDFC should implement its solution and prepare for business continuity. There are many ways to implement its new second-level security. The three distinct courses of action are as follows. It can continue to utilize RSA, but have them provide a new cloud-based solution. It can also utilize RSA, but instead have them perform a traditional off-site solution. Lastly, HDFC can do an in-house on-site solution. A cloud-based solution provides a number of unique pros as well as cons. It would allow HDFC to retain some of the best security experts in the world and would require little work from the HDFC IT department. In addition, any computation cost would be paid by use rather than a fixed price. However, it would pass off data security and talent to another company. It would also effectively lock HDFC into a contract in which laws would require on-site holding of privacy data and would create many points of failure for its new banking system. A traditional online system hosted by RSA would allow retention of RSA's expertise and would have reduced system complexity as compared to the cloud system. However, most of the cloud-based cons remain, as well as the additional time it would take to implement its fixed capacity system, as well as the cost to continually update it. An in-house on-site solution would allow for much better business continuity and would provide more intellectual capital while providing less points of failure than the RSA solutions. However, this would be a very large principal cost and would require continual growth in the IT department through personnel and equipment upgrades. After much discussion, cloud-based outsourcing was the chosen recommendation, in part because of the expected growth in India's internet as well as mobile areas. This would allow for a great temporary or permanent solution as India undergoes its transitions and growth, and would take care of many HDFC's problems quickly. However, HDFC can suffer from the intangible loss of IT knowledge as well as expertise. But ultimately, this aligns most closely with its business goals. With that being said, Group 7's presentation on the HDFC banking system comes to a close. We wish everyone a good day, and thank you for your participation.